Good afternoon, everyone. This is Dave, aka DREBG, and today is November 11th, Veterans Day, at about 3:30 in the afternoon. Came across MDA's video, and I thought I'd give a quick response. Here's just a recreation of the pound-dollar chart in the 4-hour time frame, identical to the chart that you would see in Morgan's video, where we have the support and resistance areas, the 6 EMA, the 36 EMA representing the daily and the weekly. And then, of course, the dotted line here, the pink, and this specific white dot is exactly the entry point that he indicated, as well as his stop loss and his targets. All in all, this is a great trade. Lined up everything with his rules perfectly. It's actually very well done, and not every trade is going to come out, and that's okay. But there's a few things that I would have done differently that I think, in hindsight, which is very easy for everyone else to do. I recognize that. But here's a few of the things that I picked out that I think I might have done differently. The first thing that's really coming to mind is the stop loss. It needs to be above these swing highs. This trade may have good legs to get down to that target had we just given it enough room to breathe and left it above this most recent swing high. And all you really need to do is adjust your risk to reward accordingly. Now, that said, the second area is I think that you might have been able to get in just a little bit earlier, Morgan, and here's why. You said that according to your system, which I do like, by the way, once the COT data is there and the SSI data is there, you're looking for a cross of the daily and the weekly, keeping in mind some support and resistance, etc. My idea is on the 4-hour chart, when you see that cross, you'd want to be looking to enter on the close of that candle, which obviously is right here. What I would typically want to do is see price action run up on the next candle and then use a limit order to get in on the close of the bar that there was a cross on. So it would be right here where we'd want to enter, which is about 25 pips above where the original entry was. Now in this case, it didn't really go up enough and then back down to really catch a trade on a short limit order, but maybe it could have been on the breach of the low of that candle close. Who knows? Point is, there may have been some room here to catch an entry at a little higher of a point. Now the last, okay, so there's one other little tidbit that may help, and of course when we have 25 or 30 pips more, we can put our stop loss higher and still maintain our profitability from a risk to reward standpoint. The other area was an area of support that really needed to be marked off, and that's this one right here. We have a touch here, some consolidation here, touch here, and yet here we are getting down to it and realizing that this is probably a half decent level of demand, and I'd want to at least see how that plays out. For instance, let it get to that point, break through, retrace, get in once you know that it's happened, or just let it hit and see what happens, but you definitely need to recognize what those areas are. I know that these are marked off as support and resistance areas in the daily, but now that you're on a lower time frame, you really need to kind of mark those off too if you're going to get specific and actually enter the trade. I'll do one other thing that I think might make a little bit of sense for future reference, and I'll show you what I mean. Before I enter anything, I always try and go down to a lower time frame and try to look for some divergence as much as I possibly can for a really solid entry. So what I've done here is I've removed the MACD and I've put up a 4-period RSI. We've already established that your MACD has triggered your trade according to your rules. But now, if we want to really fine-tune that entry and see if we're in a good position to get in at the right time, we need to kind of move down the time frame a little bit and then maybe look for something else that can really pinpoint where we might want to get in. So as we move down, I'll show you what I mean. This is the 1-hour chart, and I'm really not seeing a lot going on with RSI here. Everything seems to kind of be in line, and heck, since we didn't see any of this run-up right here, because this is obviously after we would have gotten into the trade, I would have looked at this and said, well, it's got a good chance of breaching this support level if we had put that in to begin with. But again, not really sure exactly how we want to get in as a pinpoint. So that means we want to continue moving down on a time frame. Here we are in a 15-minute chart. Again, the circled area is around the entry point where Morgan entered. But one thing really starts to really shine here, and that's some divergence that I'm seeing on the RSI. This RSI here corresponds, this price action here corresponds with this RSI here. And I think what you'll end up seeing is that we get some pretty steep divergence here in oversold territory. I would definitely be looking for some sort of small retrace, and you can maybe put a fib on here and see where it comes out, or wherever. But if I did do that, if I fib this out, yeah, you'll see that maybe a good point maybe be to enter after we either reach the 382 or maybe don't reach it and then breach that extra support level that we then put in, or something to that effect. In my case, though, personally, I would have seen this divergence and I would have definitely said, you know, I don't know if this is exactly where we want to get in. So using that, I definitely would have waited just to see where it might have gone. Now, who's to say that this didn't, you know, end up making me want to enter up here somewhere, which isn't much better. But the point is, had we gotten in a little sooner, as we discussed before, this retrace wouldn't have really hurt us all that much. And as we go back a little more, had we got in a little sooner, again, we would still be within our risk to reward parameters, especially if we factor in a stop loss above these highs rather than right here. So when we go back out to the 4-hour, again, we're sitting here with our entry, and as price action goes against us, I wouldn't really start to get worried until we started breaching these swing highs. And then if, again, we had put our entry just a slight bit higher, it probably would have helped a little bit, either sooner than the entry that was made here or afterwards from the divergence side of things. There's nothing that says that I wouldn't have entered here, for instance, after this rundown on this 4-hour candle, and entered here slightly higher, or entered back here at the same point before that entry. But I still would be comfortable in that we didn't really break this swing high at all, and that's still a pretty good chance of reaching this daily support level down here around where the target is. So with that, I hope it helps a little bit. I think it's a great system. Using COT data and SSI is a really strong way to get into a solid trade. The COT data and the SSI data need more room than a 4-hour chart. I think that's fair to say. But overall, I think it's a great setup. Great way to get into the trade. It may not even be a bad idea to put stop losses above this swing high and still have room to come down to whatever level that you had down here. The point is, I think SSI and COT data can still bear out that this is a solid trade. I think it just needed more room to do so. So with that, I hope it helped a little bit, and good trading. We'll see you later. Bye-bye.